We are being joined on the show by Rajesh Palviya, who's the head of technical and derivative research at Axis Securities, and also Sudip Bandyopadhyay, the group chairman at Inditrade Capital. So, gentlemen, welcome to the show then, and let's talk about the big questions for next week. Now, a few of them, and I'll lay them in front of you, and we'll take them one by one. Now, let me just take you through what all of them are. And we did see Nifty surpassing that record high level today. Will the rampage continue? Will the MPC decision follow Fed and Bank of England's suit? Will the interest rates be kept unchanged, or will we see some reversal over there? Now, let's also talk about Paytm. Will investors punish Paytm further? And, well, on the back of auto sales, will auto stocks continue to remain in the fast lane? So, we'll be discussing all of these questions with our two experts today. So, Mr. Palviya, let me come to you first, and let's talk about that record high rally that we saw on Friday. Well, Nifty did quite some bit on Friday, had quite the run, managed to cross 20 to 100, but then tempered a little bit, but managed to end the day on a record high nonetheless. So, is this a one-time rally we saw on the back of that budget announcement, or do you expect this momentum to sustain? And with that, let's also talk about Nifty Bank, because while Nifty is at record high levels, Nifty Bank is far from its own record high. So, what's your outlook on both of these indices going ahead?
Good afternoon, Steve. So overall, if you analyze both indices are looking positive. Though there is underperformance in from Bank Nifty, but looking at the overall structure and the large cap banking stocks are placed, we believe that Bank Nifty will also catch up this underperformance, and we may see another round of rally in Bank Nifty also. First, we talk about the Nifty. Yes, we do expect that this rally can extend further. It's not a one-day kind of rally, and as we have already marked a new all-time high in today's session. But overall, if we analyze the structure, the short covering action was clearly there. Nifty comfortably holding about 21,700, 21,800 call concentration area. So that covering is already taken place in the today's session also. So we believe that this really can extend, and possibly we can see 22,300 to 22,500 is the next target where we expect Nifty to continue this momentum in coming weeks. So one can remain on the long stop loss towards 21,650. For Bank Nifty, the immediate challenging level or supply area at this moment is placed at around 46,300 on Bank Nifty spot. Once we able to cross those level on a closing basis, so we do believe that yes, there could be another round of rally we can see in Bank Nifty also, and possibly we can see levels towards 46,800 to 47,000 level also for Bank Nifty. So at this moment, one can hold long position in Bank Nifty with stop loss of 45,600. That is the important level on the downside.
Okay, so those are the critical levels that you should be looking at. But Sudeep, coming to you, we just marked the budget week, and what are the standout sectors that are coming for you? Because while we were chatting with all the market experts, one such standout sector was really the oil and gas space. And just on the Friday itself, we have seen all the OMCs and the gas stocks. There was no stopping in that. Almost 8 to 9% gain in large cap names like HPCL and BPCL. How are you seeing this particular rally, and what's your view on the oil and gas space?
Well, as far as the budget is concerned, I believe that there should be an excitement around infra and construction. I think that is where a lot of the capital expenditure which government is planning will go. So naturally there is an excitement. So cement, construction, housing are the sectors where I believe there should be excitement, and there is some excitement. As far as the oil and gas sector is concerned, yes, there is a lot of excitement, and all these large cap stocks like BPCL, HPCL moved up significantly today. But I'm a bit cautious, and I will probably advise investors also to be a bit cautious. While these companies have performed exceedingly well this current financial year, the next financial year probably will not be as good. There is a reason for it, because all these companies are investing in energy transition, and they're doing it rightly so. But one has to remember that this will depress their earnings, and they're building for the long term. So the short term there will be challenges on the P&L. So that is one factor. The second factor is we are heading into a central election, and the global oil prices are volatile with conflicts going all around us. It can flare up at any point of time with the slightest of trigger, and if that does happen, the increase in oil prices will have to be kind of handled and borne by these companies. The government will definitely not come and increase oil prices till the elections are over at least. So I would be little cautious. Yes, the fact remains that they are very attractively valued vis-a-vis other PSUs. There hasn't been really a massive rally in these oil marketing companies if you compare them with railway, defense, and other metals and mineral stocks. So the excitement is understandable, but a bit of caution is warranted as well. That's what I believe.
Right, thanks for that take coming in, Mr. Bandyopadhyay. Mr. Palviya, I'm coming back to you, and let's talk about a stock that was down and out in just 2 trading sessions, down 36%, and I'm talking about Paytm. Now, we did have some type of reassurance coming from the management, where they said that they will not be working with the Paytm Payments Bank anymore, and they see some near-term impact, but they say that in the longer term or in the medium term, things should look better. So, what is your take on Paytm? Is there any coming back from this order and this diktat that the RBI has given to the company?
So I think this is second consecutive day where we have seen that stock was on lower circuit, and still investors and traders, those who are stuck in the stock, they are placing their order to exit from the stock. So I think some more pressure we can see, and looking at the overall structure now, stock is approaching to its November 2022 swing low that was at around 438. So I think this pressure can continue further, and maybe we can see further more lower level towards 450, even 400 kind of level in the continuation of this down move. So stock structure has turned very negative at this moment. So I think one should avoid at this juncture to about bottom fish this stock, because still news flow is not digested by the market at this moment, and I think those who are still stuck in the stock, they are willing to exit from the stock. So I think some more supply pressure is likely to be there in coming trading session for the stock.
All right, thanks for that take. With that, gentlemen, stay on with us on the show because we are slipping into just a very short break, but we'll be right back, so stay tuned. Hello and welcome back. You're still watching Your Trades on ET Now. Let's connect with our guests again who've been standing by with us. And Mr. Bandyopadhyay, I'll come to you now. And let's talk a little bit about FMCG, because we did have Titan that came out with its numbers in the week that went by. Mixed set coming in for Titan, but going ahead, we've got major nifty companies among the FMCG pack that will be coming out with their quarter 3 numbers, the likes of Nestle, Tata Consumer, Britannia and the likes. So, well, what's your outlook when it comes to these FMCG earnings? Are you expecting a decent set of number, or do you think it's going to be rather mixed?
It will be mixed. Look, what has happened is we've seen a couple of FMCG companies, particularly Dabur and Godrej Consumer, post decent set of numbers. And in both these set of numbers, one thing was becoming clear, that the green shoots are visible as far as rural consumption is concerned, and that's very, very reassuring. I would read it this way, that probably from Q4 onwards, we will see rural consumption coming back in some form and fashion, which will help all FMCG companies, particularly companies having significant rural exposure, which will include Britannia, ITC, HUL, as well as of course Dabur and Godrej Consumer. Nestle also will benefit. As far as Q3 is concerned, I think it will be a mixed bag. We expect strong set of numbers from Nestle. Britannia probably will continue to remain subdued on account of competition and the pressure on the from the other companies manufacturing similar products. Tata Consumer is has a lot of moving parts, so it will take a little more time to settle. They are in the right direction, but I think it will be better if we monitor Tata Consumer on a yearly basis rather than a quarter-on-quarter basis. I am positive on Tata Consumer, but I won't expect anything great from Tata Consumer as far as Q3 is concerned.
Okay, Sudip, thank you so much for sharing us your expectations from all the FMCG majors in the upcoming week. But Rajesh, coming to you, what's your stock specific ideas for the next week, and which are the stocks that are on your radar?
So, Srishti, post-budget speech, we have seen there is a clear outperformance in most of the PSU banks. So, Punjab National Bank (PNB) is looking well as on the yearly chart that clearly shows that this stock can continue further more upside, and possibly we can see a target towards 135 to 140 in the continuation of this uptrend. Series on series, there is a long built-up kind of setup is already there in PNB. So we believe that PSU bank traction is likely to continue, and PNB could be a one outperformer stock from the F&O universe. So one can look to buy this stock with stop loss of 120. Another stock is Coal India. Continuity of uptrend is there. Most of the power stocks have done well, and looking at the overall structure for Coal India, we believe that this stock can exhibit further more traction on the higher side, and possibly we can see target towards 433 to 435. So one can buy Coal India with stop loss of 410. And the third stock is Tata Consumer. Stock has shown good really, and after a brief consolidation of last 5-6 trading session, now again stock managed to view breakout of its consolidation range. So looking at the near term, short term structure, we believe that Tata Consumer can continue further more upside towards 1200 kind of level. So one can buy this stock with stop loss of 1130.
All right, thanks for your pick. And